Hello everyone, welcome back to Just Invest Today. And today we are talking about Sea Limited. Is Sea Limited nearing a bankruptcy? Who damn knows, man? In this market, I feel like anything can happen. There's a lot of companies thinking about trying to get money from the government, trying to get money from the market, trying to do anything to get money to survive in this market. What if it lasts another 2-3 years of this depressed times? Who knows? Inflation running rampant. There's so many questions to ask yourself. So is C going bankrupt, or is there a chance of it? Guys, we got to get into it in this video. But before we do, like this video, subscribe to my channel, and I'm always providing you with new videos. So click that like button, click that subscribe button right now. Let's get into it. Before we get into the reasons why C can potentially go bankrupt and some news articles that just came out, we have to look at the stock price. So C has been getting killed. I remember back in 2021, everyone was hyping up this company. I feel like everyone had FOMO about C Limited, man. And then now, just looking at the stock price, it looks crazy, from 360 all the way down to $60, at 82% downwards trend in a year, just 1 year. And this can happen. It just shows you the powerful market, and it can switch in an instant like that. And it's pretty crazy just to see it happen. No one expected this drop. If you expected this drop and you sold out early, yo, you're one of those lucky people. So I gotta give it up to people holding on strong, because if you still believe in this company, this is just going to be a minor blip on the radar. In 3-5 years, if you still believe in C, then this is nothing to you, right? So let's get into what the CEO just came out and said. But he came out and said he made a memo talking about this before, but this is just kind of getting reported. He's billionaire CEO to forgo salary as cost cuts spread. So he is doing everything in his power just to cut costs. So this is a good thing and a bad thing. Companies that are in this type of situation, that are cutting costs like crazy, foregoing salaries, doing all that, they're in a really cash crunch and they got to do everything to survive. That is a huge red flag, but it's a green flag as well, showing that the CEO loves the company. He understands what he got to do to make this company successful. So on the opposite side, that's a good thing. But man, the stock is plunging. People don't know if the strategy that it's using is successful, because all the money that it's getting from the gaming business and it's putting it into e-commerce. And the e-commerce business has been growing like crazy. But the thing about it is, it's still losing money. It's been losing money like crazy, but it's touted to gain a lot of market share. So that's its strategy: losing money on the front end, but gain a lot of market share on the back end, and hopefully become profitable in 2023 at the end of it. In the mid of it, who knows, maybe 2024. That's its plan, but it needs to do this quickly because it can't go to the capital markets to get money. And that's what the CEO is afraid of. And he's saying during this term, like, we don't know pretty much, because the economic slowdown is crazy. So right now, C is using its gaming business to generate all its money and putting that into e-commerce. The leadership team has decided that we will not take any cash compensation until the company reaches self-sufficiency. The internal memo sent to staff Thursday, days after C shut down operations in some markets and staff across its divisions. We can now see that this is not a quickly passing storm. These negative conditions will likely persist into the medium term. So it has to do a lot of these cost-cutting strategies. It has to get out of markets. India is not even allowing Free Fire to operate in its market, which is having a huge negative effect. We see companies like TikTok getting into e-commerce. So how is that going to affect this company right now? We see Shein doing crazy in the fashion sense. So TikTok, Shein, all that fashion dollars that Shopee could get from its e-commerce business, man, that's going to be, we don't know, because competition is creeping up. We have Lazada creeping up from Baba. That's going to maybe have an effect on C, because Baba has a lot of cash to depend on and keep generating money, keep promoting its product, while, man, Shopee might start kind of getting out of the promotion section and not gaining that market share as much, because they have to save all its money. So the CEO came out with a 1,000-word memo. He addressed head-on the struggle for C in an era of rising interest rates. accelerating inflation, and a volatile market. The company has lost about 170 billion of market value since October high on questions about the money-making prospects and global decline in tech stocks. With investors fleeing for safe haven investments, we do not anticipate being able to raise funds in the market. Reiterating that the company's primary objective for the next 12 to 18 months is to achieve positive cash flow as soon as possible. So they're admitting that they can't go to the capital markets to get money because they're going to need money. They are growing like a freaking monster, 99%, 163%, 100%, 127% revenue growth year after year. But guys, that does not matter if you're not generating money. If your main business, which is gonorrhea, its gaming division, if that is kind of going down, it's not generating as much revenue, it's kind of losing customers, not gaining customers as fast, you're relying on one damn product. If that product goes south, and on top of that, your e-commerce business is not booming, damn man, like that's a serious situation happening right in front of you. Just look at all the net income loss. That's what is going on right now. That's the situation. You're seeing them losing net income. The balance sheet is going to be the most important thing when it comes to this company because that's how solvent the company can be in the long term. 7 billion in total cash. Let's see how much debt they have right now. They have around 4 billion in liabilities or 4 billion in long-term debt. On top of that, they're going to look to the markets to maybe raise capital. If this damn bad era of high interest rates of the capital markets not being open for you to just get good guaranteed long-term debt at good rates, like that's going to be a struggle. So how long can this company last with $4 billion in debt, $7 billion in cash? How much of that debt do they have to pay right away? Earnings are not coming as high as they expected. So there's still a lot of so-so questions to be asked about the business. Man, C is facing a lot of stuff. Let's see how this turns out. The business is a strong business. Like Shopee is a strong business. No matter what way you put it, Shopee is strong e-commerce business. They're Free Fire, a strong gaming business, but that's kind of staying steady, maybe going on the decline. Gaming can go either here or there. 1 year it's up high, maybe in the next 2-3 years, people don't like the game as much, or there's another game that comes in and kind of takes market share, or they get bored of Free Fire. Who knows what can happen with these games? Games just not the steady, nice income. Gaming is always held by the trends of the market or trends of the time. So we gotta watch out for C Limited. If you own it, I don't own any shares of the company, but if you own it, tell me what you think about the business. Are you worried about a future bankruptcy? The CEO is coming and saying that he can't go to the capital markets to get money. So how's that going to affect the company going into the future, as well as how long is these depressed times going to last? Guys, tell me what you think about this business. Leave your comments down below and subscribe to my channel. Peace.